Let's talk about the Nasdaq 100 here today. Stock symbol QQQ. Snapped a 4-day winning streak. Not a bad day. I mean, it was only down like 0.2%. Showed that it could still rally off of the lows despite some heavy selling early on. And it showed a little bit of a relentlessness or like a Teflon mentality where nothing could really stick to it from a news standpoint. So what I want to do in this video here now is to talk further about it from a technical standpoint, where we stand. Can we expect this bounce that has been going on for the past week to continue into this week and to further the gains that we've been seeing of late? Let's go ahead and get into it right now. All right, let's take a look at the longer term perspective of Qs and then work our way into a much more shorter time frame. So you have this key support level going all the way back to July of 2023. It has held. It held in 2024 of January, and then it held again here in April 2025, each time resulting in substantial bounces to the upside. Here we've gone from just 402 all the way up to 471. That's almost a 20% move off of those lows. Incredible, incredible move. Now, in the process of doing so, we have this AVWAP level that it has broken above this past Friday. One of the things that I would tell you to keep in mind is that AVWAPs, anchored VWAPs, do not work the same way as price level resistance or support, in the sense that it can go above and below it without necessarily invalidating that level there. So what you may see is some congregating around this level before it makes its next move, whether it's higher or lower. In fact, over the last 2 days, it's traded both above it and below it at some point during the trading session, which doesn't tell me that it's free and clear of this level. Now you go back to 2022, and what you're going to find, if I can pull this up here, there we go. We stick that anchored VWAP off of its all-time highs. Initially, it broke above it, but it wasn't really that well established or followed. But it did get back above it in March of that year. And it only spent about a week above it, and then it fell right back down again. But this was around that area that it congregated around that it eventually broke down, but it traded above it and below it. So I wouldn't take it to the bank that we're necessarily out of the woods. What was more interesting is probably in August of that year, where we had pretty much a perfect test of that resistance level overhead. So we did test it, and then we fell back apart again before we established our ultimate lows in October of that year. Going back to the present day, we want to make sure that we don't get overly excited about that break on the AVWAP. Notice too on the weekly chart, one of the things that's developing here is a head and shoulders pattern. So you got the left shoulder, you got the head, and you got the right shoulder. Now, this would confirm if it breaks below this level right here. That would be pretty detrimental for the market. Some people may even ignore this huge downside shadow that took place back during the week of April 9th and draw it more parallel. It's really more of a matter of preference and say, okay, if it gets like below this level from like 428, we've confirmed the head and shoulders pattern. So there's going to be some different perspectives on how to draw that one out. For me personally, I'll probably pay most attention to this slanted neckline because I don't think that it's necessarily free and clear until it can break below that. In doing so, it would obviously take us below the lows that was established earlier this month. So that would, at that point, if we were establishing that head and shoulders pattern, it's going to already be very, very bearish. The mood's going to have been soured quite a bit. I'm not saying we're going to get down there, but I think it's something that we need to be paying close attention to if we start to see that downturn yet again. Another thing that I wanted to show you is a Fibonacci retracement. Now, the Fibonacci retracement goes back to the all-time highs, and we're going to look at how this retracement is playing out. And where it's at is at a typical retracement on a dead cat bounce, which is the 50% retracement. So essentially, from the all-time highs to the most recent lows here in April, it's managed to recover about 50% of its losses. It's not perfect, but it's sitting right there on this level here. Now, it could go still as high as right up here to this, like the 487.69 level. That would be your 61.8% retracement level. But 50% is a pretty common retracement level where you see a lot of dead cat bounces fizzle out at. So again, like the head and shoulders pattern, we're wanting to keep a close eye on that because that could impact our trading decisions going forward. And notice too, on the daily, we're actually very, very overbought over here on the stochastics here. This is a short-term stochastics. Doesn't mean that we can't stay overbought for a long time because we have spent a lot of time being overbought over the course of 2024. We're just entering overbought territory, but we're hitting some extreme levels where the price multiples and advancements in terms of like market rallies, that's probably a word salad there, but nonetheless, the amount that we should expect from the market, I guess is the better way to say it, should probably decrease to the upside as we're getting this overbought. Looking at the 30-minute chart here, let's pull this guy up. What you could have going on here from an intraday standpoint is a nice little ascending triangle pattern. And this ascending triangle pattern is essentially confirmed. So we're breaking out above it. You have resistance here, and almost right there. Came back. Well, it broke out back on the 24th. Came back and tested it here today, and it bounced right back up again. So some decent developments there on the Qs to pay close attention to going forward. I'm not a huge believer that this bounce that we're seeing is anything more than a dead cat. I've made that known quite a bit. It's not because I'm a perma bear. It's just I've lived through these kinds of sell-offs. I know their personalities. They tend to suck in a lot of buyers on that initial bounce before eventually that rug gets pulled again. So you want to make sure that you're not getting rugged by Wall Street here, that you don't buy into the idea that we're going right back to all-time highs, because the likelihood of it, not impossible, but the likelihood of it doesn't seem to be that great to me. If you enjoyed this video, I would encourage you to like and subscribe. Let me know down in the comments below, what are your thoughts, and more importantly, what's your outlook on this market? Do you think we're going back up to all-time highs, kind of like what I just said I don't think is happening, or do you think we are going lower? I'd love to hear what your thoughts are. Thank you guys, and God bless.